Okay.
Sounds good. Matt Davio back again here with the Trader Interview Series. I've got a unique guest again today. Dave is also known as @TraderMD, and you can follow him on the Twitter stream. And we've talked, for the past year or so over the stream. And Dave is a full-time resident. He's an MD working on his training in psychiatry. So, Dave, thanks for coming on. I appreciate you taking the time today.
Oh, thanks for having me, Matt. I appreciate it.
So, again, I think the beautiful thing about trading, Dave, is there are a lot of people that want to make some side income, have a passion over markets. You've got a unique perspective as a MD in training. I guess you are a full MD now as you do your residency. But, it's give us a little bit of background on how you got into trading and how that mixes with your professional life as a doctor.
Oh, sure. So what probably got me interested is what got a lot of people my age interested. I'm just shy of 30. I got interested in the markets back during the tech bubble. When I was younger, I knew a fair bit about computers. So once the tech companies started taking off, and even before that, I kind of had an idea of what was getting going, what these companies did. And I mean, back then you could pick anything and it would, make you feel like a genius, and you'd make some money off of it, things like that. So that's kind of what got me started. I've never been the type of person to be into, like real estate type investments and things like that. I just feel like that, maybe having a rental property or something is just too much work for something, for the returns that you get in the long run. And I identified, the markets as a chance to, really, have a chance to build wealth at some point, sometime in your life, once you're able to, and through various means other than just trading.
Yeah. So would you say, I was psychologically, would you say you're more suited for shorter term trading / investing, than longer term then? I mean, you kind of know yourself in that regard.
Oh yeah, definitely. I mean, I do terrible with mutual funds and things like that. I don't. I think all of us as traders in particular, we keep up on what's going on, and we also don't necessarily like the idea of someone getting a huge chunk of our returns if they do well, and not taking any of the risk if they don't do so well. So it's like almost like a lose-lose situation for you. I've never really seen the point of that myself.
Yeah, I think it's tough, and I think, and we can get into this a little bit in the interview, but, I think you have to know kind of your psychological makeup, I think, before you step into this game and into the arena, into the playing field. Would you say that's true? Maybe, I kind of learned it as I went versus maybe looking in the mirror to start. We all have our strengths and weaknesses, and I think I've learned over time by being a trader where my strengths and weaknesses were. But I think you can always be, even from day one, even before, let's say you're not in this business, it's good to, really figure out who you are as a person before you start playing this game.
Oh, and that's what I'm sure you see all the time. You have to know who you are, before, getting into something like this. You need to know what your emotions are like. You need to know, what your patience tolerance is like. You need to know what your risk tolerance is like. You need to know, quite a bit about yourself. I know myself that, I'm not the type of person who can, just buy a company and, let it sit for a year or 2 years or who knows how long. There are people who've done great with that, and I think that's fantastic for them, but I just know that doesn't suit me. I'm not even someone who can probably hold things for a terribly long period of time. And part of that is not just knowing who I am, but also my time constraints. Right. I'm a part-time trader. So I only get to take a look at the markets a few hours a day. So I need to make the most out of those few hours. I'm not looking to hit home runs or just to necessarily, swing trade futures or anything like that. because I mean, when you're away in these markets, if you don't have at least, one eye on the screens and a big event's coming up and I have to be at work during those times, so, I'm unable to just let things ride during, extended periods of times. So I mainly take advantage of, shorter term inefficiencies in the market, and just shorter term, intraday swings more than anything else.
So talk about that a little bit, because you have been in school for, what has it been, 10, you were in school for 8 years and then...
Practically my whole life.
Yeah, I mean, the last, let's call it a decade. So you've traded this way probably since you were liquid and probably since you were trading. So it's almost a function of demand for you. This is how you have to live your life. So talk about that a little bit and how you kind of settled into that, because it's not, most people I would say, want to trade stocks because that's what they know. You do trade futures. So how did you, I want to hear a little bit part-time versus full-time, futures versus stocks, why you made these decisions.
Oh, sure. Like yourself, I'm on the West Coast. And as most of us do, I started off as someone who started trading stocks. The markets open here on the West Coast at about 6:30. The equities do, that is. Very rarely does it ever make sense to buy a stock during pre-market, or at least, for me, I found that to be the case. So I would basically, get up, and not really have a chance to trade or do much of anything, until 6:30. Then of course, you probably want to let the stock settle in a little bit and kind of get an idea of what's going on, kind of get an idea of reading the order flow and this and that. And by the time you've done that, if I have to be to work by 8:30, 9, it gives me a very short window to take advantage of those opportunities. And one of the reasons why I, migrated over to futures is because, futures are open basically 24/5. You don't necessarily have to trade them that early or that much or that long, but you can take a look at the overnight. You can take a look at how the futures react to, say, pre-market, economic releases, things like that, and kind of get an idea of what the order flow is like, kind of what it's done overnight, kind of what, it's done over the last few days, things like that. So.
And do you have a specific vehicle or vehicles that you prefer to trade, in your arsenal?
Sure. I mean, my favorite index to trade is probably the Russell 2000 Futures Index. Okay. I'm not much of an ES trader, and that probably would surprise either you or some other people. But I found that the ES just doesn't suit me very well. I always felt like the ES trades somewhat like a big tanker ship. It's just so large, and that there's so many orders. At every offer price, at every bid price. That if you want to get something at a price, and you're stuck deep in the bid or deep in the ask, there's a very good chance you're not going to get filled.
Sure. Yeah. So and again, give us a typical, what are you looking for out of a trade? Are you a scalper when you're looking at the TF? You're looking for a point to 2 points. What kind of range are you expecting? Just to give people some idea, if they don't trade, the Russell, nominals are around 800 and the S&P is around, 1300 today. So, a 1% move in the S&P is 13 points, a 1% move in the Russell is about 8 points. So give us a little idea of how you then look at that market.
Oh, sure. I trade both with the trend and against the trend.
That's confusing.
I don't necessarily. I'm sorry?
That's confusing if you're not a trader.
Yeah, exactly. I trade both with the direction of the market intraday, and then also sometimes against it. The latter is probably more rare. And I don't necessarily have point targets. I kind of keep an eye on what the markets are doing. Just over time, as most of us would kind of agree to, that you get an appreciation for being able to read, price action, and you sometimes you factor the volume into that as well. Try not to keep too many indicators on my charts or anything like that. I do keep a set of Bollinger Bands on there at both 2 sigma and 3 sigma, just to kind of get an idea of where price is in relation to volatility. Okay. And I also use a 5 EMA, but that's pretty much it. I'll throw a VWAP on there just to get an idea of who's in control and is price coming back down to touch it or not. But I really don't use that to factor into any trades. Okay.
So, again, when do you typically leave for work then? Are you leaving at 7:30 here on the West Coast?
Sometimes, it depends. Every day of the week I have a different schedule, unfortunately. Gotcha. On Mondays and Thursdays I'm able to stick around until about 8:15 or so. Good. On Tuesdays and Fridays I've got to be out of here by 7:40, 7:45.
Okay, so give us a bread and butter trade that you may put on. Just give us an idea of how you kind of view the market, how you make a decision, and then how you trade or don't trade.
Oh, sure. I always start with a top-down approach of what are the monthly and weekly doing. Break it down to a daily and a 60-minute. And then, I'll keep an eye on a 15-minute time frame, but I base most of my trade decisions off the 5-minute. Say a market is trending nicely upward. I'll try to go long on a pullback to the 5 EMA with targets to the prior high, and then thereon, depending on what the other time frames look like. Right. If something is just had a couple big moves or a nice big move in a day, then the next day you might look for more of a balanced trade and try to fade the extremes. Preferably to fade the extreme in the direction of the trend, basically. So say like today, for example, just looking at the Russell, we started off at about as low as 775 overnight. Yeah. And we hit 793.50. Yeah. During the day. Yeah. And tomorrow, say we pull back to like around 778, 779, providing structure overnight is good, then I will try to fade that as it kind of bounces off of that lower support there. Right.
So again, there's your counter trade, but you're trading the trend. So as you said, but although the last couple of days is confusing because we had a big down day yesterday, a big up day today, so you always have different factors when you're looking at the market. But I understand what you're saying, and how does that? I find personally, I don't trade the middle part of the day anyway. So I do. I'm involved in other businesses, and that really for me, 8:30 until almost 11:30, 12, I don't even look at markets really. I mean, I set alerts, but, I don't spend a lot of time. I find that to be, again, I use this example all the time, but volume is big here at the beginning and the end, and everywhere in between is just kind of garbage, I find. So I'm intrigued, and I've really brought myself to a point of trading for almost 2 decades that I used to maybe chop myself up during those periods, Dave, and I had to learn the hard way by giving money back. And now I just say I set my day, basically that first hour and a half and that last hour and a half. And outside of that, and on a trend day like today, I'm not even looking to do much after that. After 10 o'clock, I know we're going to close near the high, and unless I'm buying every little, as you said, micro scalp, I'm done. So, right. So I can see very, very clearly how your lifestyle as a part-time trader almost is very, very full-time. I would imagine you do pretty well doing this. Yeah,
I mean, it's something that definitely works out for me. And I agree with you. Those middle hours are generally, probably a good 75% of the time or more, just sausage hours, where you are just going to get, minced to pieces and often, maybe because I'm so used to trading the morning, the West Coast morning, or basically up until noontime on the East Coast, or right around there, that I don't even trade the close all that well. Usually the bulk of my profits are made, in the first few hours of the day, and I might make a little bit more during like the lunch hour, but there's a good chance that just the way I trade and what I'm used to, that I'll probably give back some of my profits during the lunch hour. So
sure. So let's talk a bit. I mean, do you consider what you do part-time trading, or do you think it would be any different if you were full-time trading? I still consider it part-time. I think if I was more full-time, I probably would wake up earlier, finish my day sooner. Just around the, even like overnight last night, for example. I mean, there's some fantastic moves in the euro. There's good opportunities to buy the ES or the TF. And I think that as time goes on, that more and more of the moves are going to occur overnight and early in the session. Just as we become a more globalized, economy and things like that. Yeah. It's just a matter of time before that it becomes a predominate even more. Yeah, it's a great point that you bring up, because I think the point you're bringing up is it's evolving, it's changing. A method that worked for the last 5 years may continue to work marginally, and then eventually it stops working. And I think as traders, you have to, have good habits and rid yourself of bad habits. So let's talk a little bit about that. How do how does one, again, with your background as a psychiatrist, how do you develop, and what are some of those good habits?
Good habits basically are formed by repetition. You have to ingrain it into yourself to the point where it becomes second nature. Whereas bad habits can linger on and are often impulsive, things like that. The one thing that I probably talk to most people about, at least in terms of in terms of my psychiatric profession, is that is their habits in terms of sleep. People will do all kinds of things to impact their quality of sleep, and it's just as a result of bad habits. They'll be sitting in bed watching TV. They'll be looking at their computer screens right before they go to sleep. They'll be having a caffeinated beverage late at night. Things like that. And the same thing kind of happens it carries over in trading. Right. That bad habits are basically avoiding everything that would be detrimental from your your progress. And some examples of that are not having stop losses in place. Not fully doing your homework, whatever that might be, in terms of how you view the markets before coming into a session. Other bad habits are just like I described it. I've noticed that I myself don't trade as well when when I haven't slept well. And that's another bad habit. And there have been a number of times where I've even been somewhat of a victim to that bad habit of my own, despite how aware I am of how much sleep plays a part in your mental function and things like that.
So talk about that, because again, I think peak performance, whether it's an athletic endeavor, work endeavor, trading, they're all basically functions of work in one sense or another. So give me some guidance. If I'm sitting, talking to you professionally, give me some guidance on sleep. What can I do? You mentioned a number of things that are clear to a lot of people. Don't drink caffeine after certain hours. I'm a big believer, and I think it works. You've got to get up same time, go to bed same time. Again, part of that regimentation, that really works for me, whether it's a weekend or not. If I stay up late on a weekend and I miss an hour, I feel it, so give me, what you would tell people that is kind of good guidelines to, develop that good sleep habit, because I think that is a very powerful one.
Oh, I mean, definitely. I think, I think sleep is one of the most habit forming things that we're used to. And you notice that over time. A number of things that I mention are, make sure you get physical exercise. I mean, the sleep is basically to relax your mind and then also your body, but more so your mind, so you need to do everything you possibly can to relax your mind. That means, getting rid of, stressful things. If you've got, a list of important things to do tomorrow, make sure you've written those down somewhere. Make sure, your alarms are in place. Make sure, if you've got an important meeting the next day, for example, go ahead and set everything up, or a test even for that matter. Make sure you set everything up so that once you get up in the morning that you're ready to go. You've got all your ducks lined up. Everything's in place. Make sure you're not involving yourself in too mentally stimulating activities, after, within maybe like an hour of bedtime, so, don't be sitting up and watching, the late night, garbage that's on TV. Don't be playing video games on your computer, things like that.
Yeah. What about sex before bed? Is that a good thing?
Oh yeah, definitely. I mean, there are definitely some sleep inducing properties of that, and obviously relaxation inducing properties of that. I think that's important as well.
So you would encourage that to all of us traders out there, that we show this to our wives, and more sex is good for better sleep, along with everything. Along with everything else. Yeah.
Yeah, exactly. I would say to a certain extent. There's probably a point of negative returns for just about everything.
Sure. Yeah, the old marginal rate of return, diminished returns, right? Econ 101, there is a marginal utility, obviously, there at some point. What about bad habits? Again, you talked a lot about regimentation, whether it's sleep, whether it's preparation, whether it's your day. Again, distractions. Distractions are bad for regimentation. If it's, one of the things I find in trading, if I've got something going on, as you said, a stressful thing or something family related that distracts me from my regular routine, I don't trade. I've just again learned if I can't be in that zone, if I'm distracted that first hour, the last hour, then I missed it. I know there'll be another day tomorrow, God willing, but there's only so much. There's very little I can affect. But
exactly. I mean, as you've mentioned, and as many people have mentioned, that trading is more of a mental function, and how we are between the ears more than anything else. It probably has very little to do with your charting package. It probably has very little to do with who you're following or what indicator you're using. It's as long as it's in sync with you and you trust it, and you're used to kind of looking at things in the same way. So going back to that is when you have something that's distracting your focus, when you have something that's going on big outside of the markets, whether whether your kid's got a play at school, or whether something else has come up, or whether there's an illness in the family, or anything of that nature. It's always important to deal with that first, and kind of even take a step back if you need to for a few days, or even the day after, just to kind of get back into the swing of things. I've learned the hard way by when these things are happening, not to kind of be half in the market. I'm either in or I'm out, and there's really no middle ground for me. And I guess I've learned that. And one of the things, I also find time, whether it's a Monday or a Friday, as you said, maybe after a long weekend or after a holiday trading like we had, I didn't really trade on Monday because
I'm not in the zone. I want to take another day just to kind of watch it and feel it a little bit. And so I didn't trade. Yesterday was a good day. Today, again, I'm experiencing a trend day, and I know that I don't do too much on days like that, especially very thin pullback trend days. So, I learned to take those days as gifts, I guess, and that's one of the way that I train myself to not do the bad habits that I used to have, which is, hey, this thing, we're pushing near the highs here. We couldn't really close over a high, but we're right at the high. Are we going higher? Are we going, don't fight it. Just let it kind of, breathe a little bit. And I think that's fantastic advice. How do you think that trading benefits you as a doctor?
One thing that I think comes into mind is that in trading, anything can happen. These days in medicine, everything is so algorithm based. Everything is there's a huge component of evidence based medicine and how they try to research every possible outcome that they can, and there's a good percentage of the time where you just don't know what's going to happen. Yeah. And you have to accept that, and I think one of the reasons why a lot of physicians have difficulty in the markets is because you just don't know what's going to happen, and you have to be comfortable with that. You could come to me and say that, I've had this, this cough for the last week, and everything could make it sound like it's a bacterial infection. I could write an antibiotic for you. And you just might not respond to that because there's a chance it could be a viral infection or something else. Yeah. And you just have to deal with that uncertainty, and that you still have to kind of go through the logical progressions. Because in the markets we never know what will happen. Even in that example that you just shared, that it's the market's trending up, it's kind of coiling tight near the high. Is it going to go higher? Is it going to pull back first? I mean, you don't know, and and some of those situations, as you mentioned, that different people deal with better than others, right. and a lot of us traders don't necessarily deal with the trend days all that well,
Yeah, no, I think the clarity there is that I don't know. I don't know as an individual what's going to happen every day. I mean, I have an idea of the normal. And dealing with that, that thing that's outside of the norm is I think what always throws people. Can you deal with it? And as somebody who helps existing traders, wannabe traders, traders maybe that have slipped and fall, we all do it. The biggest thing is about the only thing I can define is here's my risk, and if I put my stop in, that's where I'm going to take my loss. I can't tell you where I'm going to, it's funny, people will say, well, Matt, you told us kind of where to stop out, but, where are you taking profits? I don't know. And that's the truth. Sometimes, I have an idea, but just like you said, Dave, I think you set yourself up for failure if you come in every day saying, I'm going to make X dollars. And I don't do that either. I come into every day saying, I'm going to take what the market gives me. And I have a couple things that I utilize in my daily routine. One is how much of a range in anything that I'm trading did it move in the first half hour? Because that's when the animal spirits are the greatest, I find. Just like you said, you make most of your money on those opening trades. I like to wait kind of for 30 minutes typically before I'll even put on a trade, because I want to see how rabid those animal spirits are. And that kind of keeps me out of trouble. It keeps me out of guessing. I find that opening hour very there's a lot of guessing going on.
Right. I think for especially for someone like yourself who is able to go for the bigger moves and who prefers to go for the bigger moves, that it definitely pays to wait.
Right. So, what kind of habits have you developed that you want to change as a trader? That maybe you're not, that are your weaknesses.
There's obviously positives and negatives to it. One thing that you mentioned earlier is about, having to make X number of dollars a day. Thankfully for me, having a second income, prevents me from having to have that mentality, cause whatever I make in the markets is basically for my long-term growth more than anything else. If I don't make anything, if even if that account goes to bust, that's, I'll still be able to put food on the table. I'll still be able to spend time with my family. I'll still be able to do the things I want to enjoy. Will I be able to necessarily be able to do everything I want to enjoy? Probably not, but that's the upside to it. Now, the downside to it is that missing the better days. I thought, for example, yesterday was a day that I probably would have done very well at had I had a chance to trade it.
Yeah.
So when you often look at moves that you missed as a part-time trader, that definitely leads to some bad habits in the way you think a little bit.
Yeah.
You think that coulda, woulda, shoulda,
right.
As opposed to, who knows what would have happened,
Right.
And that's one of the things that I still struggle to deal with at times. Just oftentimes you're looking for a specific setup for it to play out a specific way, and then either it'll happen overnight or it'll happen when you're not there, and that part is frustrating.
Yeah. That's why I came up with the name Miss Trade. That was one of my biggest weaknesses. Is I miss trades every day, and learning to deal with that is one of the hardest things as a trader for me.
I think that while I'm on the subject, I want to mention one thing that people say that, you shouldn't get mad, you shouldn't get frustrated, you shouldn't get happy, you shouldn't get this, you shouldn't get that, and I personally disagree. I think that we have a whole gamut of emotions, and everybody's going to have different emotions at different times. It's not necessarily that you feel the emotions that's a bad thing. It's how you deal with them. And kind of going back to what we just talked about, the important thing is not for me to not let the frustration, factor into my next trades. To make sure that I'm able to go in there the next day and, execute my plan, as I have intended, to not try to make up for the fact that, I missed a move either the day before or overnight or whatever the case is. You can only, catch so much of what's going on. Even if you're there sitting at it, you still might miss it.
Right. I agree. So how do you do that? How do you do that? How do you, how do you get beyond that? Because, I'm asking you. What kinds of things do you do to put the good trade or the bad trade behind you and focus on the present?
Sometimes taking a step away from the screens is important, whether that's to go see what the weather's like outside, get a breath of fresh air, go get a drink from the fridge. Maybe you need some more time away. Just not letting yourself, sit there in that frustrated state, for me, is what works. If you notice, I have a treadmill behind my left shoulder here. I'll often hop on that. I make a point to hop on that, between every trading session, best I can.
Right.
But sometimes I'll even get on that during the day if I'm there trading and if I don't have anything else to do. Other times, if for example I had a day off and I'm trading for the full day and think there's just not a whole lot to do, or if I'm feeling too happy or too frustrated or whatever, I'll go take a nap.
Yeah.
I'll go run some errands. I'll go check up on football news. I'll go do something else. I'll close down my brokerage platform. I'll do everything I possibly can in order to avoid trading without a clear mind.
Yeah, I'm a big fan. As I told you before we came on air, today I usually work out during that lunchtime, 9 to 11. Somewhere I'll go for an hour and a half and get my workout in, and then same thing. I do two things. I leave these screens. I leave my brokerage platform. I have a handheld that I can watch price pretty, effortlessly, and I'm only a block and a half from my gym, so I know I can get back if I have to, but I also don't leave myself unprotected. I leave stops, before I go. I make sure everything's in order, and I leave. And that has really helped me over the years. I can tell you, the first decade I'd stick around, I'd get here 3 hours before the open, I'd stay 5 hours after, and it's just too much. It was too much, and I tended to overthink, overreact, everything was done over the top. And for me, I've really tried to, and I really try to live this philosophy. It's really more minimal as I get older, the better I am. The whole less, right. The whole less is more works.
And I think that's kind of key to the development of most traders. One thing I did for virtually all of 2010 and even prior was turn the TV off. Back in the days of when the financial crisis was on. I mean, maybe there was a reason to keep it on because, who knows that any announcement could come on at any minute. But, after a while, you just realize that a lot of that's gibberish and that you realize that, there's thousands of people out there with, thousands of opinions and, just because this person says the market's going to do this or this person's going to say the market's going to do that. I mean, you still have your own, especially over time, you develop that you have your own thoughts of what the market's going to do, what you're going to do if you're wrong, what you're going to do if you're right, and that's that. You're not going to let somebody's tweet or somebody coming on TV and saying, somebody basically voicing the opposite opinion to shake you out of your trade or to reverse or something like that.
Right. Again, I think this is just spot on. What field of psychiatry are you going to practice?
I will be a adult and adolescent psychiatrist, mainly working with adults. I potentially thought about going into a child fellowship as well, in order to be what they call triple boarded, triple board certified, in order to work with child, adolescent, and adults. But I don't know that that's necessarily the best route for me. I find it difficult to work with kids who might be unhealthy because either their parents aren't taking care of them or they're in a bad spot. I mean, now those kinds of things are beyond frustrating. Making money or losing money in the market is one thing, but to see the entire trajectory of somebody's life, basically be fixed in stone because they've got, useless parents is just something that's too difficult for me to deal with. And there's better people out there who can do that, and I'm just not one of them.
You just prompted some, what's the show on HBO with, I'm drawing a blank. I've watched it for 3 seasons now. He's a psychologist, I think, actually. He's not a doctor.
I think you mean In Treatment?
Yeah, In Treatment. Have you seen the show?
I watched the first few episodes, but I never really kept up with it beyond that, and I haven't watched an episode in years. I'm sure it's a great show, but I feel like it's one of those shows that take quite a bit of your time. From what I remember, they have several episodes on a week and things like that, and I just don't have the time for that.
Gotcha. I was just curious if you saw it because a lot of what you said, it's almost like you just as you are as a trader, you need to find that niche. As you said, your weaknesses, and that would be a difficult one for you as a psychiatrist dealing with, as you said, kids that are just born with their backs against the wall, had nothing to do with anything, except they were born by parents who, put them into circumstances that have, they have no control over. I would find that very difficult, very frustrating.
Yeah, and I just wanted to make a quick side point that not all children who see psychiatrists are in that predicament. Of course,
no.
There's plenty of kids who have to see a psychiatrist and have great, fantastic parents, but it's those frustrating aspects that would probably just tear me to pieces over the long run.
Yeah. Do you think you think you could see yourself setting up a niche counseling traders?
Oh yeah, I definitely think I could. It's just a matter of one getting to the point where I'm able to do that. Two, making sure that what I would be able to provide to the traders is worthwhile to them. And three, it's just probably just more experience as a trader, being able to, maybe even experience the full-time aspect of trading, before I'm really able to help, those that are trying to become full-time traders, so I can kind of see things from their eyes as well.
So, got a couple quick questions as far as, do you think markets exhibit the same neurotic symptoms as individuals, even though there is more algorithms and computers out there today, but the programs are still written by, people?
I don't necessarily know that that's the case. I think people can have a whole gamut of emotions, whereas, markets have, two primary emotions of fear and greed. And there's other, emotions that factor in, but, markets definitely do, exhibit, herd type behavior. When there's who knows, whatever the latest craze is, things like that, or when people are so, are so fed up and disgusted with something that the herd will go the other way. Those would probably be the only real similarities I see to actual human behavior, in terms of those parts of the spectrum, I should say.
Yeah. So do you think markets herd more than people, in general?
Oh, sure. I mean, any given market can herd on different time frames even, things can get overextended, overbought, oversold on a 1 minute, on a 5 minute, on a weekly, monthly, whatever the time frame you want to name. It's, and then different markets can exhibit that or not, the one market could be, extended at one point, and another might just be, range bound and waiting for, that next, setup or direction.
Give me some examples in real life of how you would use trading terms like directional, scalping, swing trading, some of those types of hedging, give me some instances where you could use analogies from the trading world into the psychiatric world.
I probably would have to get back to you on that. I'm not really sure that, using those exact terms, would have very much overlap. Yeah, I'm going to have to get back to you on that.
Okay, cool. I would be curious. Give it some thought, and we can talk about that again offline. I think there are some instances where I could use those terms, but I just wanted to get your feedback. Maybe if I gave you more specific instances, buying versus renting, end of life issues. These are pretty prevalent major issues in our world today. And I'm just curious if you think, as a doctor, I don't know where you stand politically, but, end of life and the cost in those last, what do they say, the last months or number of years outweighs everything in the rest of your life. I mean, some of these things, as our healthcare system gets at some point, they're philosophical, they're moral, they're difficult.
Sure.
So,
they're very difficult questions. I agree. I personally, I personally don't have a political affiliation. I think everybody who's supposedly out there trying to do the best thing for us really isn't. And I know a lot of traders feel the same way. And I think that brings me to another quick side point is that one of the things that I had difficulty with at one point in my trading career was being able to separate my views from what would be either best for the country or best for the markets or whatever. I mean, at the end of the day, you just have to trade what's there. Right. And it wasn't until that I was able to kind of get past that hump was I able to make further progress as a trader. In regards to the buying versus renting, I mean it's the same as any given stock. In certain markets it might be it might make sense to buy. In other markets, it might make sense to just wait. Other markets, it might, it might make sense to just, go for a quick scalp. And then in regards to the end of life issues, I personally think that's very, very sad, the way most people in medical facilities end their lives at the current point in time. Nobody's ever going to tell you, or at least I don't think that will come to that point anytime soon, because there'll be such a political backlash over it. But to me, once I've lost my quality of life is probably when I wouldn't want to continue fighting the good fight. I want to live life to the fullest while I'm here, and then I want to rest peacefully after that. Whether that comes 30, 40, 50 years from now, who knows when that comes for me. I'm not a fan of, at least for myself, again, I'm only just speaking on terms of myself, and wouldn't want to influence anybody else's, opinions on this in any way. But, I'm not a fan of long-term life support. I'm not a fan of myself, having to live in bed, for an extended period of time, like an indefinite period of time, for example. Those just aren't some things I could do. And you obviously have to factor other things in, and like what kind of family you have around you, and stuff like that. And who knows? I've seen a lot of people say the exact same things I'm saying right now, but when it came down to it, at the end of the day, that they'll change their opinions faster than you can blink, and I don't know if that might happen to me as well. So
sure, yeah. Again, not having been there myself, I couldn't answer that either. But I tend to agree with you. And philosophically, I think not being there, kind of in that same thing. It's a quality of life issue, and if my body is gone and my brain is still alive, I don't know where I'd be. I don't know. Again, hopefully I don't have to make that decision. But it's a very heavy decision. But I like to play the what if game, and I kind of do the same thing with my trading. I always say, if price were here, how would I be? Is my stop in place? Am I good with it? To me, these are always the questions I like to ask myself as a trader. If we are trading here, what would I do? If that way, when we get to those points, I'm suited for reacting to where we are in price. I think that's a constant in this game. It's one of the hardest things to do, because it is going to change, and it may go to your price, and it may go further below, and may go further above. And I think those are the things that really press your mettle and test you in life.
Yeah, I agree. You definitely have to have an idea in place of what you're going to do at that point in time. And kind of relating that back to the end of life issue again, is that a lot of people haven't thought about that. I think that can make things very difficult when it does get down to that point. Whatever their decisions might be, or whatever they'd like to do, they haven't even thought about it, or sat down and maybe discussed it with their closest relatives or loved ones, and a lot of the times the loved ones will not even have an idea of what that person would like to do at that point in time, and I think it just makes that situation more difficult on the person who's ill, right, and everybody around them too.
So let's switch gears a little bit, but kind of in the same vein, I guess, a little lighter topic. But we're both big football fans. My alma mater at Michigan is going through just total hell, and I think they had no plan for the last 6 years, really since Lloyd Carr was there. I would guess 04, 05 is when it all started unraveling to me. We won the national championship in '98, and the next 7 years just deteriorated, and a lot of that had to do with the leadership. That being said, talk a little bit about quarterbacking, because we talked about this a little offline, and trading. I look at somebody like Jim Harbaugh, a former quarterback, a great leader who, again, he was at Michigan when I was there. He's not coming back. I'm settled with that now. I knew that back in 04 when he and Bill Martin sparred, and I knew it would never, he'd never come back. His ego is too big. So, football, trading, quarterbacking, and trading. Give us your thoughts on that.
Sure. I think that the one real constant between trading and quarterbacking, or even a lot of sports on elite levels, is that the difference between one player and the next. There probably isn't a whole lot of difference. One guy might be slightly stronger, one guy might be slightly taller. But at the end of the day, it's the difference between the Tom Brady's and the Peyton Mannings versus the Alex Smiths and the Ryan Leafs, Jamarcus Russells is what's between the ears. It's all up there. The same thing goes for trading. It's how it's how they view the game, and it's how they respond to the fear of throwing an interception versus the fear of taking a sack, or the anxiety that comes up of when it comes down to playing in a big time in a big time game, whatever a big time game might be for a different quarterback. Even last night's bowl game is a perfect example. I don't know the kid's name on the Razorback team last night.
Mallett.
I just hope my 49ers don't draft him, because, when push came to shove at the end of the game, when things actually mattered, when they had a chance to win the game, and that when he, when the crunch was on, he just didn't have, what it took to put the ball in the right place. And that has nothing to do with his arm strength or his mechanics or anything like that. It all comes down to things being mental, and I think that one of the things that I've realized in terms of kind of going back to the trading versus medical field again, is that in trading, that there's no you really don't get any building blocks from the start. In the medical field, they would never send you out to work on patients before you had at least a decent grasp of how to manage things. You would at least have to pass like different ACLS courses and show that you're competent to a certain degree before you're going to go out there and even really speak to patients in a medical nature. And the one thing that the markets don't have, and you almost never get as a trader, is risk management. That's the one thing that's the heart of every last successful trader who has gone on and essentially kept their profits with them throughout the course of their careers. Is that the cornerstones of trading are more of risk management, as opposed to what kind of orders can you place with this different broker, or what the commission fees are, or this or that, or
computer screens and software. Exactly, none of that matters. It still comes down to, can you control risk?
Right, and that's one thing that's completely opposite in terms of being a physician versus being a trader. Is that you're not ever really taught the most important aspects of the risk management, the psychological aspects of things, until you kind of figure it out and you go along and you pick up bits and pieces. Hopefully you're lucky enough to have read Trading in the Zone by Mark Douglas. I think that's a fantastic book, and probably one of the only books that I'd recommend.
I agree.
It's just a completely different paradox when medicine is basically there to serve a social good, versus trading is basically there to serve an economical good. So the forces at play in order to get people interested in the markets are a lot different.
Yeah. Well, and to bring football into it also, just as you said, most of these players are pretty much skill levels, as you said, are pretty similar. They're not that different. But being a great practice player is much different than being a game player. Under that same situation, like you said, you see the difference very clearly watching Terrell Pryor manage the clock and manage the field, knowing the risks much differently than Ryan Mallett does. He has no fear of every situation, and you can see that in the way that he delivers results. and his confidence, and knowing that if he fails, he'll get up the next play and do it again. And I think that is the hardest thing, and you see that a lot in trading. You'll see traders drift from one style to the next, style drift, even though the very first one or second one or the third one, the three different things they had as their core work. But if it doesn't work a few times in a row, they're like, I'm out, I need a new coach. I need a new, and I think that also gets back to what we started with, which is developing a regimen and consistent, development in a trader and in life, again, is doing these things over and over again, figuring out what definitely doesn't work, pushing it aside, and using what does work, and using that as your core basis.
Right, and I think a lot of that comes into having the right kind of pillars in place. One thing that's kind of key for a quarterback to succeed in the NFL is having different components around them. They need to have their have a left tackle that they can trust. They need to have right. They need to have exactly if they're right-handed. They need to have receivers that they can depend on to be in the right place at the right time, things like that. And oftentimes with a lot of these quarterbacks is that who knows, they might have had what it takes to mentally develop to be an elite quarterback, but because of the sacks that they're taking, because of the interceptions that they're throwing, because of the constant bad memories that they're kind of always forming, that that the fear kind of leads them away from ever succeeding. They're always thinking about the last bad throw. They're always thinking about the last bad sack. And in trading, I think that's kind of one of the things that makes traders jump from one from one system to the next is because you're always thinking about that last bad loss. You're always thinking about that last trade that you missed, things like that. And over time, those aspects of anxiety and fear can be crippling, and possibly even stunt someone's growth to the point where they never get it. Where they're always looking for something else. When to throw a quarterback back into the equation, Ryan Leaf is the extreme on that end, and Tom Brady, like you said, these guys are the polar opposites of just what we've been talking about. The way that they dealt with adversity or success, and didn't define their next move based upon adversity or success. Exactly. I mean, it's it's most people that watch the game of football can tell pretty early on if a quarterback has it or not. That it's that what they always refer to it as the it factor, but they never actually spend enough time looking at what's inside the heads of these players that they're drafting, and they wonder why they didn't turn out so well. Yeah. And the difference is as clearly stated as you put it, as between the Ryan Leafs and the Tom Bradys on the way that they view things, on the way that they that their decision making process, on the way they go for the higher probability throws. They'll take their throws down the field when the odds are in their favor. Things like that. You can't take a home run if it's not there. You can't go for the Hail Mary if it's not there, unless you absolutely have to. But in trading, there's no time component. So thankfully, you don't have to be making those Hail Marys.
Sounds to me, Dave, like you and I need to start a consulting business to help franchises and college programs to both recruit and to draft better, because it's kind of the Michael Lewis, Billy Beane Moneyball model, except it's getting more into here versus brawn. The whole Michael Lewis Moneyball book was basically about developing physical talent. Now we need to take it to the next step. You have the physical talent, but now we need to work on BAM. And I know some people, some of these NFL franchises are beginning to work on this, but what a wide open field I would imagine there.
Oh, I agree. I wish they would let me sit down with the draft prospects, at least at the quarterback position, for for a team and be able to really see if these guys, have it or not. I mean, I think the simplest question that they can probably ask all these guys is what do they plan on doing with all that money once they're drafted?
Yeah.
I mean, you have just this last week, they have a guy like Sam Bradford saying that, since he's gotten his, $50 million contract or whatever, he's bought a ping pong table, versus, someone like a Jamarcus Russell is going out there and spending money on, all kinds of, like codeine type drugs and who knows what else. And I mean, it's just a way in which you view it. And I mean, even simple questions like that would be able to save a lot of these teams a heartache, but they always fall in love with the physical prospects of someone. But I mean,
Well, we're going to send this tape off to the Detroit Lions and the 49ers, and I can think of probably 15 franchises that need our help. So, Dave, thanks for coming on. I appreciate it. Happy New Year. Do you have any big time guesswork on any big things that are going to happen in the markets this year? You want to throw out any guesses? Anything that nobody's expecting that you want to throw out?
I don't know that I have any huge insight onto what's going to happen. I take a look at the markets, day to day, week to week, and trade it as I see what's coming. I wouldn't be surprised if we have something like another flash crash again, just because that issue was never really dealt with. I wouldn't be surprised if the markets just continue to melt up as they continue to pour money into the markets, and people continue to kind of chase that risk until that there's nobody left to hold the bag. I mean, it's just about anything can happen, and I mean, I think that's what makes this business so interesting is that every day you can show up at your screens and something can happen that's never happened before, or or might be setting up to see how things play out in the future, and you're always kind of tuned in to the never-ending aspect of it.
Well, Dave, the symptoms are still there, or rather are gone right now, to use doctor speak, but the disease is still underlying. So we don't know why the disease is not showing itself, but I agree with you. That's good insight. I appreciate it. Thanks for coming on, and again, follow Dave on the Twitter stream at TraderMD, and I'm going to continue probably doing a regular session here with Dave if he'll allow me over in the future. So thanks for coming on.
Thanks, Matt. I appreciate it.
Okay.